You've been searching for the best way to generate passive income in your life and heard that real estate is a great way to do it. But you're tired of all the so-called gurus who are all talk and no substance. Get ready to celebrate because Kevin Bupp has spent 14 years successfully making it happen. This is the Real Estate Investing for Cashflow podcast. Now, here's Kevin Bupp.
Hey guys, Kevin Bupp here, and I want to welcome you to another episode of the Real Estate Investing for Cashflow podcast, where our mission is to help you build and maintain massive amounts of cash flow through income-producing real estate investments. Now, our guest for this week's show is real estate investment expert Mitch Stephen. Mitch has been a self-employed real estate investor for 20 plus years and has owned thousands of properties, including residential, mobile homes, and storage facilities. His real estate investing career started at the age of 23 when he read Nothing Down by Robert Allen, which is one of the classic real estate investing books. That was on my bookshelf a long, long time ago. So Mitch actually started out buying manufactured homes in mobile home parks that he did not own. So unlike my business where we own the parks, he was buying the actual individual mobile homes and parks that he didn't own, otherwise known as a Lonnie dealer. He accumulated a total of 140 manufactured homes and sold 50 of those notes to Jim Clayton of Clayton Manufactured Homes. Additionally, he has been buying storage facilities for 28 years and currently owns 14 facilities in the Canyon Lake, Texas area. And that's actually what we're going to be spending most of our time talking about here today is his storage business and, you know, the what, the who, the when, and why, right? We're going to learn everything we can about why he loves that business. So guys, I'm very excited to have a candid conversation with Mitch about a variety of topics. And I'm absolutely confident that you're going to find a huge amount of value in our time together. And so with that, just a few items I want to cover before we get on to the show with Mitch. First and foremost, if you're tuning into the show for the very first time, I want to welcome you to our family here at the Real Estate Investing for Cashflow podcast. We wouldn't be here if it wasn't for you. And if you're one of the many millions of loyal listeners that listen each and every week or every month, every episode, just want to welcome you back and thank you for taking time out of your day to tune in. Again, we wouldn't be here if it wasn't for you listeners. I wouldn't have this fun job if it wasn't for you guys. And it's not a job at all. It's a fun hobby. And I love meeting you guys and giving value and hopefully helping you progress in your real estate investing career. And so being that it's little listeners like yourself that make this all possible, just want to take a moment and give a shout out to two different awesome listeners that took the time to leave a 5-star rating on iTunes. That's one of the many ways that we grow the show is by actually getting feedback from you guys on the iTunes platform. And so I've got two here. One's from Adam T. And Adam says, great content, loads of value. How to use the cap rate to increase the value of a property tremendously by increasing revenues and reducing expenses. I absolutely love this topic when Kevin discusses it. So Adam, thank you. Really appreciate that. Next one is from Greg Helbeck. And Greg says, Kevin provides a ton of value in every episode. It really got my mind thinking more about commercial investing and cash flow. Amazing value provided on a daily basis. Thank you so much. Well, again, really appreciate both of you guys for taking the time to leave those reviews on iTunes. Again, that really is what drives our business. And so if you love what we're doing here, I'm going to put this out there. If you love what we're doing here and you find that you get value each and every week, please take a minute. It's a very quick process. Go over and subscribe to the show first and foremost to make sure that you don't miss any of the new episodes that come out. And if you're so inclined, leave us an honest review and rating. If you don't feel we deserve 5 stars, leave whatever you feel is honest, okay? I'll be sure to give you a shout out on an upcoming episode if you do that. Again, these reviews are a way for us to attract new guests. Folks like Mitch, they go on and see what kind of feedback we're getting. If we're doing a terrible job, then Mitch is not going to come on the show. So, be honest in your review. And it also gives you a way to communicate with me and give me suggestions for future episodes, things that will maybe even bring more value to you and your business. So, and just real quick, 2 housekeeping items before we get on to the show with Mitch. I want to remind you about the free 30-minute phone consultation with me that I just started offering again after about a year-long hiatus where you and I can essentially get on the phone, no ulterior motive at all. I'm not going to try to sell you anything or pitch anything. And you can ask me anything related to real estate investing. And whether you're brand new looking to get started or you're a seasoned veteran, you just want to talk shop, I'd love to connect with you. And again, no ulterior motive here. I promise you, I will not try to sell you anything or opt you into a list and then bombard you with a bunch of crap. This is just an honest to goodness conversation. And I've already spoken to hundreds of you over the years and hopefully have been able to add value to hundreds of you over the years as well. Those that I have this opportunity to connect with. If you'd like to schedule that call with me, go to my website, kevinbupp.com. On the right-hand side, about 3/4 of the way down, there is a button that says Schedule a Call with Kevin. Go ahead and click that link, pick a time off my calendar. Make sure that you add notes in there about what you'd like to discuss during our call. The more detailed notes, the better our time will be spent. 30 minutes goes by really fast. And so be very specific about what you'd like to chat about during those 30 minutes so that we can cover everything. Make sure that you walk away feeling like you've actually got a lot of value that you can put in use and take action on in your business. All right, guys. So without further ado, I'd like to welcome our guest for today's show, Mitch Stephen. Mitch, how you doing today, my friend?
Damn, you're good. You're like a professional, man.
Hey, I've been doing it long, man.
Listen from you.
About 400 plus episodes, or probably more than that now. So, Mitch, I appreciate you coming on the show. I know you're a super busy guy, and so appreciate you taking time out of your day to join us here and just have a candid conversation about your business, your background, and you've been at this a long time. You've been at this longer than I have. So, with time comes experience. Not all good experiences, right? There's trials and tribulations that we all face. As real estate investors, typically you don't grow unless you're facing challenges. And so I'm excited to hear about all the good things that are happening, but also maybe some of the struggles you've encountered along the way, more specifically related to the storage business. You've done a lot of everything through your career, but storage is really the topic that we're going to focus on today. But before we dive into the meat and potatoes, if you would, Mitch, maybe take a few minutes and tell our listeners just a little bit more about your background and yourself and how you got into real estate.
First of all, I like to preface that with I failed at everything else. It was the last thing left. There was nothing left. I tried everything else, didn't work out. I was a late bloomer. I had always been an entrepreneur since high school. I tried a lot of things. When I say failed, I didn't leave owing anybody anything. I always kept my name clean. I kept my credit and my word clean because that was important to me. But I just wasn't the business for me, or I learned things about the business that I didn't like, or I don't know, or I just couldn't get paid sometimes in certain kind of businesses. It was difficult to collect after you'd done your work. So I read a book called Nothing Down by Robert Allen. This guy had the audacity to suggest that I didn't need money to, you could be broke and you could still go be in the real estate game. And I thought, well, wow, I'm so broke I could buy the whole town. So I'm going to check this out. I didn't own the concept in my heart for a long time. I read the words, I understood it, but I didn't quite understand. I didn't quite own the concept in my heart. It's very difficult to own that concept that you can go out, write a contract with no money, and promise you're going to come up with the money in X amount of days, and then actually go out there and come up with the money because your deal's so good that the money will flock to it. It took me a little while to own that. And then after that, my first year, no one would really loan me any money, so I bought my first 100 houses on credit cards. I bought 45 houses from March 1996 to the end of the year. So what's that, like 9 months? I bought 45 houses. Next year, I bought 65 houses. Next year, about 150 houses. And I've averaged about 100 houses a year for 22 years. So I buy a house about every 4 to 5 days for 22 years, almost 2,000 houses in my hometown or right around my hometown of San Antonio, Texas.
Is most of, when you say you're buying, or most of those, is your majority of that business wholesaling the houses, or are you actually buying and holding them and, fixing them up as rentals or fixing and flipping, or what does most of your business consist of, Mitch? Outside of self-storage, we're going to talk about storage.
Last year I bought 97 houses. I wholesaled 2. I retailed 24 because people on my team needed to get paid, and they don't get paid until I get paid. So they get paid upon success. So I probably could, because what I'm really trying to do is I owner finance the other 60 some odd houses. That's really what I want to do, is buy houses with OPM, other people's money, at 50 cents on the dollar or 60 cents on the dollar. And then I want to owner finance them for 100% on the dollar, market price. And I want to collect that income stream, that cash flow stream, the difference between what I owe and they owe me, which I average about $535 positive cash flow per house. In the last 300 deals, we just did a thing on it. But I'm not a landlord. I'm the bank. They give me a down payment. They owe me 30 years on a mortgage, no balloon, and I collect the payments. And if the air conditioner breaks, it's not my air conditioner because I've sold the house to them on payments. That's my goal. And I have created hundreds upon hundreds upon hundreds of notes in my career, and I still own hundreds and hundreds and hundreds of notes today. And I don't sell notes anymore. In the beginning, I used to sell notes, but through accident, I was forced to keep my notes. One time in the late 90s, Associates closed. They were a division of Ford Motor Credit, and they bought all the third-party notes. They closed, and we couldn't sell any more notes. And I quickly learned that keeping the note was way better than selling the note. I don't know what the hell I was thinking. Why did I sell any notes, So
Yeah, hey, you live and you learn, right? It's all about the progression in this niche, right? Just failing forward fast, but that's not really a fail. I mean, it's just ultimately you decide that there was a better long-term strategy than creating these income streams and then selling them off, right? It's better to keep them for long term and accumulate a lot of cash flow, which is again that's the reason that we're in the mobile home park space. We typically buy with the intent of building cash flow inside each one of those entities and keeping it for the long term and having a sustainable business that spits out cash each and every month. And so I want to chat with you about, you've got your hands in a lot of different pots. You've been very successful in many different niches. Our show is focused on the commercial real estate side of things. And I think that ties in perfectly, as I'd mentioned in the introduction, to your experience in the storage space. I know that just like a lot of success stories, people kind of stumble into particular niches. We somewhat stumbled into mobile home parks. For those that have never heard that story, I won't share it here today because I want to focus on your business. But the storage space, you love it. You've been in it for 28 years and you own 14 facilities. You've owned other ones as well that you've either sold or moved on from. But it was very much an accident. So maybe talk to that a little bit first, how you ultimately came about the storage industry. And then we'll talk about more intimate details of that business and how you've kind of grown over the years and, what you're really looking for. Maybe we'll give like a best case study, a worst case study, and we'll dive a little deeper into that business model. But let's start off by how you got into that particular niche.
Well, what I was going to point out here is the subtitle of my book, Failing Forward to Financial Freedom. This was not, I never had a master plan of what I was going to do. And a good friend of mine before he passed away, Ken D'Angelo, who started Homevestors, once made the comment that the entrepreneur rarely ends up with the business that he starts. He's always morphing to the most money per the least resistance. Mm-hmm. And when you get into the minutia of businesses, things start to appear, and the entrepreneur will say, it's much easier to make the money if I just do this, or I just do X, or I just do Y. And they kind of morph away from what they started into something else. I was into cash flow. I didn't, but to quote Jack Bosch, we had, you have one-time cash, temporary cash, and forever cash. And so the wholesaling and the fix and flip and the rehab and sell model was a one-time cash event. You bought your property, you did whatever it is you're going to do to it, you sold it, and you got a check, and it was over. I recognized that as a job pretty early. Then I started carrying notes. I tried to be a landlord. I hated it. I hated being a landlord for houses. Either I was really bad at it or it's just a bad strategy. But for me, the bottom line on rentals, like rental houses, was it never was true because you had so many liabilities on the left-hand side of the page, starting from the back fence to the front mailbox, that the money you're supposed to make on paper seemed to evaporate with all those liabilities. So I got into owner financing my houses where I could get cash flow, but I lost all the liabilities. I'm essentially the bank. I would sell my house with a down payment and agree to take 30 years worth of payments. And all of a sudden, I wasn't responsible for any of those things anymore. Not the hot water heater, not the roof, not the doors, the windows, the faucets, nothing. And so when the money came in, it was my money. But that's still temporary cash because the notes are going to expire. So I had to find, after reading Jack Bosch's book, I said, I've got to find what my forever cash play is. And a forever cash play is like apartment complexes or something that you own that you rent out or you lease that is going to go on until you decide to sell it. Until you decide, not someone else decides to pay you off or whatever. When you decide you want to stop it. So I looked, I already knew I didn't want to do apartments. I looked at strip centers. I looked at, different things. And then when I saw storages, I thought, this is the perfect cash flow forever thing. There's no carpet, no sheetrock, no windows, no faucets, no hot water heater, no anything. And I can rent it until I don't want to do it anymore forever, potentially forever. And that became my forever model. I flip houses and owner finances houses to build wealth. I take that money and put it into storages to preserve the wealth until I die.
Got it. No, that makes a ton of sense. And, I want to dive a little deeper into, why storage though, right? Like why did you, what were some of the selling factors that sold you on that particular niche other than like the no carpet, no toilets, things of that nature? I mean, talk to me about some of the economics behind it, because it's more to it than just not dealing with, normal tenants that would rent a house from you or rent a mobile home from you. There's a little bit more to the story. You saw an opportunity not just to deal with the tenants, but also from a return standpoint. You know, the returns were very, very sexy in comparison to maybe some of the other niches that you had researched. So maybe speak to that a little bit, because again, you own 14 today. You've owned more than that over the years, and you continue buying them. I mean, so it's a niche that you've been in for a long time, and I'm assuming a niche that you don't plan on getting out of anytime soon.
Now I'm expanding right now. I'm building 3 multi-million-dollar facilities right now. They're in different stages of development. First of all, I just recognized when I bought my first 13 boat storages on dry land, they were like a corrugated aluminum garage with doors that had chicken wire between them to separate the stalls. And you could look, you could go in the building, you could see all 13 boats. And it had caliche dirt floors and just that corrugated Lay's potato chip looking, Ruffles potato chip looking metal. And it had been around for a long time. It was right in front of a park. I bought it for $8,000. They owed about $50 a month in rent, and it was over $500 net operating cash flow. So I had my money back in a relatively short period of time, and I started to see a dynamic. If someone didn't pay me, I locked their boat up. Those boats are generally worth a little bit of money back then. Today, they're worth exorbitant amount of money. I have about half boat storages and half RV storages. Boat and RV, and then the other half is self-storage where people put their personal belongings. But the coolest thing was it's not like evicting a family from a house or apartment complex or a home. There's much less resistance. They're not fighting for their kids' school district or where are they going to live or where are they going to sleep. It's just a bunch of junk or some toys that they may have already come to the conclusion that they can't afford or they don't want anymore.
Yep.
And the foreclosure process is much shorter. If I'm Johnny on the spot, I can get someone out of a storage in exactly 31 days. I can be auctioning their stuff. Also, I'm occupying generally 99.9% of the time commercial property, which is going up in value. Sometimes people have recognized that storages are a perfect way to occupy some very valuable land and get paid while the city is growing to it, over the years. And when it finally gets there, the storages are not even worth anything really anymore compared to what the dirt is worth.
Sure.
So it's a perfect way to hold land. It's one of the easiest things to hire a manager for in the world. It's pretty easy to operate them. They have gates. They have computer software systems now that make it very easy. And your manager doesn't have to be a tremendous judge of character. And the rules are pretty simple for almost anyone to follow. So it was a simple business to hire someone to do. I buy the storages or I repair or remodel them, and then I move on, and my managers run them, and I spend very little time on 1,600 doors.
Okay, good deal. So you'd made a mention of the different types of storage. I just want to highlight that there. You'd mentioned self-storage, which is mostly like personal items, boat storage, and then RV storage. Maybe speak to the different economics of more so boat and RV, because you own communities in an area that are, I'm assuming, near recreational lakes, where folks will put their boat. As far as the RV, maybe it's an area where there's lots of RVs. Can you speak to that a little bit? Because that might not work like a boat. A boat storage wouldn't work, more than likely, probably 3 hours away from the closest body of water. And so there's a demand-supply factor that's really associated with the different types of storage that you own. Maybe you could speak to that a little bit.
Well, when you're around the lake, then you got that issue. Now, the question is, does your lake allow piers or docks at every individual house? My lake does not allow docks or piers. They have a couple of marinas that offer, wet storage where you leave your boat parked in the water. $35 a foot is what it costs to rent there. So it's expensive. Then the next alternative was my little boat barns, and they're not complicated. They're just pole barns with doors in most cases, but I've gotten to fancier ones with roll-up doors, and the boats have gotten longer. That means the turnaround room has to be more.
Yep.
So when you're looking at land for boats, you don't only need to have a longer stalls now, 35 to 40 feet, and wider now because the boats have everything's gotten bigger. But you also have to have more space between the stalls because these boats are usually on a trailer behind a pretty long truck. So there's a lot of factors. But I like the boats because usually there's a lien on these boats by the bank. Mm-hmm. And if they don't pay if the occupant doesn't pay their rent, I can double lock their boat up. And eventually the bank is going to make all the back payments and the late fees so that they can get their collateral out of my boat bond.
Sure. Sure. That's a beautiful thing. I want to talk about a couple of the new developments that you have going on and more from a perspective of how do you demand in this niche? How do you determine whether or not there's a sufficient demand to either do an expansion project or a brand new ground up development? And I don't know the different 3 projects that you're working on right now, if they're expansions or if they're ground up developments, but either way, how do you make a determination? What does that process look like to make a determination that there is enough demand in that particular marketplace to absorb these new units that I'm going to bring online?
Well, I have one expansion of 100 units and then 2 from the ground up. One's 325 units and one's 389 units. Mm-hmm. And on the expansion, it's easy. I mean, we're taking the phone calls, we're full, and that's one thing you never want to say in the storage business is you're full. You know, if you're full, then your prices aren't high enough. You need to have 2 vacancies of every size all the time. Because if you say you're full, some jerk like Mitch Stephen will come in and build a place right next to you. You know what I mean? The barrier to entrance in the storage business is not all that big in rural areas. Now, in the city, it's still a big barrier. But in rural areas where I'm at, and that's where I started because I could afford to start there, you know, there's not a big, huge barrier to entrance. It's a plus and it's a minus. So, you know, if I have 1 unit left, it's $10 more expensive than I've ever charged. If that one rents, then I'm going and I'm raising everyone who has that unit. I'm going and raising them till someone flips out. Actually, till 2 people flip out. And I'm just going to keep raising rents on all the 10 by 10s until 2 10 by 10s tell me, you know, go to hell, I'm moving. So that's what happens. You got to have 2 of everything all the time and never say I'm busy. So it's easy in the expansions because you're getting calls and you know what people are asking for. When you go to build the new ones, you'd be very wise to pay a company that charges $7,000 to $8,000 to $10,000 to do a complete study of the area and tell you not only should you build there, yes or no, because about 83% of the time they'll tell you no, that it's oversaturated. But if they say yes, then they'll tell you what you should build. One of the last ones I did, I noticed all those big box 4-story multi-level storage, climate-controlled self-storage units were all around, and then some mom and pops, and I thought, man, I stole this land. It's perfect for storages, but I think this place is saturated. And my hunch was right, but I had a plan B. If it's saturated with self-storage, then I want it, and I told the guy, if it's saturated with self-storage, tell me what my odds are if I built covered parking and RV parking and open parking, private, covered, and open. I think that's going to be my play. I was right, and I'm paving 7 acres, paving it, poking holes in the ground, putting up covered parking at one end, full private parking at the other end, and leaving a huge gap in the middle for open parking. And as people call me and ask for either covered or private, I'll just add a row and I'll just keep expanding towards the middle. So I'll have the perfect unit mix. I'll put like 2 rows in the back covered. I'll put 2 rows in the front completely private. And then I'll just start taking phone calls and I'll build whichever ones I need.
Very, very interesting. I like the business model. No, it's one of those niches that's always been captivating to me. We've never owned self-storage, although I see the merit behind it and I see the power in that particular niche, especially if you understand the economics behind it and how to properly assess the supply demand factors in any given market. And, you know, speaking a little bit to, you know, new investors.
Can I interject here real quick?
Yeah.
You know, mobile home parks. Mobile homes are not known for having the most closet space in the world, if I'm correct. I've owned a lot of mobile homes. I don't think they have the most closet space in the world. And a perfect fit is a big mobile home community. And if you got any extra land at all, you should maybe think about putting some storages on it because it's a perfect fit.
Yeah, we don't own any storage, but I've definitely looked at a number of communities over the years that have a storage component, you know, whether it be in the front or in the back, but it's an added component. I've never dug deep enough to know whether or not most of the tenants in the storage side were from the park. But no, I think it was a common model at some point, but I can't say I've seen many today that ultimately that have come across my desk. But no, I agree with you. I've seen other mobile home park models where they might put a shed. The owner of the park will rent, 10 by 10 sheds and literally deliver them behind the plot of land behind the trailer, and then rent it for $40 a month, $50 a month to the resident. And then if they don't want it anymore, they it's on a pallet or on skids, and they literally hook a tractor up to it and drag it away and put it somewhere else. So kind of more of a mobile storage model. But in any event, everyone needs storage, right? We've got a lot of junk, and we don't like getting rid of
hoarders.
Yeah. I wanted to ask you about some of the bigger mistakes that you see that folks make when they're getting into the self-storage space. Maybe, underwriting them incorrectly. You can never believe a seller's profit and loss statement. And it's not necessarily that they're always trying to be misleading, but how they're running it might not be exactly how you intend to run it. And so what are some of the bigger mistakes that folks make to where you see, big challenges come into where they overpay, they lose money, they don't hit their projections based on how they thought the thing would perform? Give me kind of the biggest ones.
The biggest challenge is not anywhere close to that. The biggest challenge is water and making sure that the water runs off in the worst case scenarios where you have 5 or 8 or 10 inches or 15 inches in a day, that it's not going to override your drainage, because then it'll flood every unit and it's a disaster. Also, not having wrongful disposal insurance or not having insurance for certain storage problems. I told a guy one time to dispose of unit 12 and not, and he misheard me and disposed of a different number, Of course, then it's all a bunch of junk in these storages. There's nothing, all this storage wars and their auction, that's all staged. It's all bull crap. Rarely is there anything of any value in these storages. It's just important to the people, but they're not on the street. These things have no value. But of course, when you wrongfully dispose of someone's unit, everything in there was worth $1 million.
Yeah.
There was a pot of gold in there. There was, personal pictures with John Lennon autographed. All of it's gone, and of course, they don't have any pictures of any of it. So
sure. Very interesting. I want to back up a little bit. You made a comment a number of minutes ago regarding the low barrier to entry, especially in a rural market like most of your facilities are in. How does one get past that? I mean, how do you insulate yourself from the risk of another less sophisticated operator? Maybe they've got money, but they're less sophisticated, and they haven't their analysis of, yes, there's demand in this market.
Try to expand as fast as you can. When you see the demand, keep taking up the space, and don't ever say you're full. I mean,
got it.
You can't say you're full. If someone says you got to, I got plenty of them. Even if you got one left, I got plenty of them. How many do you need? You never use the tactic, I got one left. Now, usually scarcity is a tactic that you would use to get someone to hurry up and take the unit, or take it now, or don't wait because I only got one left. I never say that in the storage business. My managers are trained not to say that. We've always got plenty. We have tons, like if you're one of those Mitch Stevens on the other end of the line, don't even think about building. We can't fill up.
Got it. Now that makes sense. Talk to me about the recession. How does that affect not necessarily the personal self-storage, but I want to talk more so about boats and RVs. I mean, these are things that people purchase with their additional income. The economy's well, they're making good money, dual household income. Now recession hits, someone gets a pay cut. Husband or wife lose their job. First things that go are those discretionary items like RVs or boats or other toys that might not be as important as a roof over their head. How does the boat and RV side of the business fare when there's an economic downturn? Maybe use 2006, 2007 as an example on how your properties fare, at least the boat and RV storage side of it.
Okay, very interesting. You have some really good questions. So even in the boat and RV storage, there's different levels of that. There's covered parking. Mm-hmm. There's open air parking. Then there's private parking on dirt. People put their boat in there, close the door, and you cannot see it from the outside. You can go into any stall, and all you can see is your boat. You can't see anyone else's boat with your little cubicle with your door, And then so you have that cubicle on dirt or gravel, and then you have that cubicle on concrete. Mm-hmm. So look, if you build a cubicle for an RV or for a boat on concrete, it actually can have two uses. It can be self-storage or it could be boat storage. If you build on gravel or dirt, then it's only one use. You can only park a vehicle because you'd never put personal storages on a ground that can get damp or on dirt, Mm-hmm. So if you limit the amount of covered parking and open parking, just enough to have diversity. But I try to build all my boat storages on concrete so that in the recession, when the boats leave, there seems to be an influx of people with self-storage stuff because people may lose their houses, they may lose their businesses, but they're not going to throw all their crap in the trash. They're going to bring it over to Mitch's place and store it. So during the recession, we didn't increase and we didn't decrease. We stayed about even because the chaos, for the people that were leaving us, there were people involved in chaos that needed to bring their remnants of their business or the remnants of their household to be stored until they could get back on their feet again. So we stayed level in the recession. Now, my house flipping business boomed like crazy in the recession. Mm-hmm. I was buying houses with other people's money. The banks weren't loaning because that's the nature of a recession. Banks close up. The prices of houses dropped. I didn't need banks to buy houses. I was using private money. So I bought a house a day for 50 days in a row in the recession, 45 days. And then I was selling with owner financing, so my buyer didn't need a bank either. So I was the only guy open on both ends in the recession. Didn't need a bank to buy, and my buyer didn't need a bank to buy from me because I was providing it. So I was booming like crazy. That's what I learned in the recession. I was also watching that recession to see how the storages did. They were level. They never really quite changed. Now, you thought a lot of boat people would have went under. But people, these boats these days are $60, $80, $100, $150, $200,000 these boats are. These guys don't get hurt in a recession, a lot of them. Mm-hmm. They're above the recession. Even so, if they can't make their payment, I've got their boat locked up or double locked, and the bank's going to pay me.
Got it.
And sometimes during the recession, they let these things sit for a year or two because the banks aren't really eager to go out and grab a boat. And they put their head in the sand. And so as long as I know there's a boat with a lien on it, and when you put boats in storages, you really need to get a lot of information from them, serial numbers, lien holders, everything, and how much is owed on it and all this stuff. I knew the boats that the banks had as collateral.
It's a guaranteed payment.
I just let them sit. Let them sit. Let the late payments rack up. I'll let them sit because it's going to take years for that my storage bill to outrun the value of that boat.
Got it. That makes sense. I really like the idea of when you go into developing one of these boat and RV storage facilities, really going with the mindset of like readaptive use. Like, how could this be something else if ultimately the demand for the current product doesn't exist or decline? So you can convert it over to a personal self-storage. I really like that.
So what's cool is when I'm talking about this 7 acres that we're paving and putting the covered parking in the back, 2 rows, and 2 rows of private parking in the front, and then building whatever we need. The coolest thing is let's say that the covered parking and the private parking met right in the middle. They met, and I can't build anymore, but I keep getting calls for covered parking. For private parking, private, fully enclosed. The covered roof, the open parking, is the same exact frame as the private. All I have to do is start putting metal around the side.
Got it. I love it. My
covered parking can become private with just some handful of sheet of metal.
I think the lesson that I kind of pull away from that, whether it's self-storage or any other type of real estate investment, is always think about like you got your plan A, but then you got your plan B and your plan C. Like you need to have multiple backup plans. Always know what either the exit or the backup plan, not just one, but multiple. Otherwise, probably don't get into the deal. If you can't think of a plan B, at least, let alone a plan C, then you may want to rethink whether or not it's a good investment opportunity, because ultimately all different investment types have their ebbs and flows. All of them react differently during downturns in the market. Some thrive, some get hurt, very badly. And so again, always go into it with a plan A and then a plan B and a plan C. And if you can get more plans than that, if you can go to plan D, E, and F, even better for you. So Mitch, this has been an absolute blast. You shared a lot of incredible information today, lots of gold nuggets, but now I'm going to enter into, and I didn't prepare you for this. I never like to prepare our guests for this. I want to enter into what I like to call the golden nugget segment of the show. And again, you've given us lots of information already, but I'd like to ask if you had just one final golden nugget of advice or wisdom left that you can leave with our listeners that may inspire and motivate them as they progress in their real estate investing career, what would that one last golden nugget be?
Okay, so during the recession, before the recession, we were all into this, try to get automated, try to be hands off and do as much as we could. And so we had set up a system where people would call us. We would give them the unit over the phone. They would go, put themselves in the unit, unlock the unit. We'd give them, the whole thing. And it was kind of fun there for a little bit. We'd be on our pontoon boat at the lake and we'd rent 7 units, back when we were doing it ourselves. And then the recession hit and things got scary. And we did see a little bit of a drop at first. And that was really scary in our occupancy rate. We also noticed it in the house business. We had tried to automate a lot of that. So the golden nugget is be careful about automation. Your company has to have a face and a personality, and a kiosk ain't going to cut it. Ain't going to cut it at all. When we started going out to meet, when we started dropping off in the storages, my wife decided I'm going to meet every single customer, and I'm going to talk to them, and I'm going to put them in myself and give them service. And people flocked. We didn't lose anybody after that. Once she started talking to people, they fell in love with her. They fell in love with the way that we handled them, and they wouldn't leave. And if the space wasn't right for them, we could say, well, hold on, let me look at my books. Okay, we got another one that's a little bit bigger for you over here, and your business has to have a face. Even at my house flipping business, we got almost so automated that our company had no personality, and people didn't appreciate it. So we started getting real life salesmen we had the whole let yourself in the house program. It sucked because the idea is I'm so important to you that no one will even show up. That's I love those recordings. Your business is very important to us. I said, yeah, it's so important. You've got a recorder answering and you're going to put me on hold. That's how important my ass is to you. And I get mad and I hang up.
No, that makes sense. No, you're absolutely right. I mean, each and every business in and of itself is a breathing and living entity, and you got to feed that entity. You got to make sure there's an actual personality behind it. And it'd be interesting to see how AI, artificial intelligence kind of evolves over the coming years. I think that a lot of folks they're adopting that type of technology in their business. And, it's a beautiful thing in theory, if you truly can automate all the processes of your business to where it remains either equally as profitable or more profitable by introducing this type of technology. But I'm sure some businesses will thrive, and others where there's a little bit more personality required might have a little more challenging time adopting that type of a technology, such as a business like yours or like mine.
There's 2 car washes right from me. There's 2 places that are right in my path when I go. One of them's fully automated, and one of them has people there to help me. And I go to the one with people, and I really don't give a damn if it costs $1 or $2 more. I really don't. But, I can buy all this stuff, nuts and bolts, off the internet, but I go to Home Depot because I have questions. I need someone to talk to me. What's your experience with this piece of pipe compared to that piece of pipe? I need to talk to someone. You know what I mean?
Sure. No, absolutely. You make some very valid points there, Mitch. Well, this has been a lot of fun, my friend. I really appreciate you coming on the show. And what is the best way for folks that are listening? They want to learn more about you, your company, what it is you do. Where can they find you?
Go to 1000houses.com. That's 1000houses.com. And I got all kinds of free stuff there. Just click on the free tab. You can get 100 pages of my first book free. There's an hour and 40-minute webinar on how and why I flip houses with seller financing. All kinds of stuff there free. People say I give away too much. I don't believe that. I believe that you get back tenfold, and I give as much as I can. And if you can launch a career from what I've given you free, more power to you, brother. More power to you.
I absolutely love it. Well, Mitch, really appreciate you coming on here. It's been an absolute pleasure, and look forward to staying in touch with you. And until that point in time, man, just keep doing what you're doing, okay?
All right. Thank you. Thanks for having me on. It's been a pleasure.
Congratulations! Now you've got more of the best tricks of the trade in building massive amounts of passive income from real estate. For more amazing resources, visit realestateinvestingforcashflow.com, and we'll see you next Monday morning.